So what's the golden ticket to retiring in style within the next decade? Is it our favorite Bitcoin, everyone's favorite digital gold? Maybe it's NASDAQ tech stocks. Yeah, baby, they're so hot, racing to dominate the AI revolution in robotics. Let's go. I'm actually pretty bullish on that stuff. It's pretty cool. Could it even be good old gold? You know, the same one central banks are suddenly hoarding like it's 1971 again? It's not gold. Maybe it's dog coins. I know what you're thinking. Dog with hat? That's the retirement plan, man. No. Look, I want to crown Bitcoin the champ here, but let's be honest. The days of turning $100 into $1 million might be as dependable as Jim Cramer's predictions here. It's probably not going to happen. Maybe we need to look at the data just to be sure. So stick around as we put these heavyweights, Bitcoin, stocks, and gold up against each other to see where the real money's being made and figure out which one of these deserves a spot in your investing portfolio. Let's start by talking about gold. Look, gold's been the go-to store of value for thousands of years. Peter Schiff swears by it, and honestly, I don't blame him. I like gold. Gold's kind of cool. For centuries, it's held the crown as the undisputed safe haven asset. It's the boomer of all investments. Respected, slow-moving, and deeply allergic to change. But let's talk numbers. Is gold actually a good investment these days? Well, gold was trading at around $1,160 an ounce 10 years ago. It's currently sitting between $3,300 and $3,500 approximately at the time of recording this video. That's about 184% to 200% returns in a decade. I mean, hey, it's not terrible, is it? Compound annual growth rate, or CAGR, of around 11%, which was really, that number was pushed up over the last few months when the price rallied, right? But not too bad, especially when you consider that the S&P 500, which carries more risk, averages around 10 to 12% annually. And just for context, that return beats the 8% inflation spike during the 2022 pandemic. But to be fair, we've got to zoom out a little bit. This performance hasn't always been the norm. Now, according to Belgian fintech firm Curvo, the average return of gold over the past 40 years is just 4.8%. And you have to keep in mind we're in the ETF era, which started in 2004, so maybe 40 years ago isn't the perfect data, but still, 4.8%. That said, momentum has picked up recently, with gold registering a 33% gain just last year, which really skews the numbers to the upside here on the correlation. Without that 33% gain, gold would be looking a hell of a lot worse. So what gives? Gold's supposed to be boring, right? Why is the price suddenly heating up? 33% a year for gold is insane. That's insane. It doesn't happen normally. Central banks have been stacking gold like crazy, adding more than 1,000 tons to the reserves annually over the past 3 years, more than double the 400 to 500 ton average seen in the previous decade. Meanwhile, 73% of central banks are basically out here saying right now that, yeah, we're not betting on the dollar like we used to. We're not betting on U.S. debt like we used to. They expect a moderate to major drop in U.S. dollar-denominated reserves over the next 5 years, and they're quietly shifting their chips to gold. In fact, there's a lot of speculation that China and Russia are secretly buying a lot of gold that they're not publicly talking about. So this could mean a big supply crunch, which of course is bullish for gold, right? In the short to medium term, sure, gold might shine, and you got to keep in mind, for it to double from here to $7,000 to get 100% return on your money, it's got to go up to about a $50 trillion market cap. That's insane. But we have to remember, too, that it's not as scarce as it may seem. Deep sea mining, asteroid retrieval tech, this is all very real stuff, plus the possible transmutation of lead into gold that was proven to be doable finally after millennia of people wanting to do it. Was actually done by the guys over in Switzerland at the CERN labs. So it's only a matter of time before somebody can figure out how to scale it up to industrial production levels. I mean, just look at what happened to pearls or diamonds once we learned how to farm pearls or make diamonds in a lab. The prices have collapsed on those compared to what they once were. With the advent of AI, expect technology to mature even faster. They're going to find more gold, guys. They're never going to find more Bitcoin. Remember that. Who knows? We might be mining asteroids in our lifetime, which sounds insane, but it's only crazy until it's done, and science fiction often becomes science reality. In other words, that limited supply story for gold might be living on borrowed time. Now, before we get into the next part of the story, guys, if you want to save thousands of dollars on trading fees when you're trading crypto, Bitcoin, Ethereum, Solana, then you got to check out Femex. There's a link right down below, and that link's going to get you exclusive VIP level 2 access. So it means you're going to get a 50% discount on your spot maker fees, 40% discount on your futures maker fees, and access up to $30,000 in deposit and trading bonuses. Femex is fast, secure, and available to everyone everywhere. That means you might need a VPN in some cases. Femex has the liquidity, the trust, and now one of the best offers in the game. Go check it out. Link down below. Get in while it lasts. So let's move to tech stocks. Speaking of advancing technology, the NASDAQ, the home of tech giants, has been a monster absolute crazy performance since 1970. And sure, it took some brutal hits during the dot-com crash, the 2008 global financial crisis, and yes, even the corona beer pandemic. But this is risk, this is tech, and it always sells off the hardest. It's a lot more speculative than buying, I don't know, toilet paper companies. But zoom out, it's been climbing like a champ. In just the last 10 years, the NASDAQ has delivered an impressive 17.6% annual return, easily beating gold and beating the S&P 500. The NASDAQ is the place to be. And if you were lucky enough to pick the right stocks, NVIDIA, for example, the returns have been crazier. And look, NVIDIA, their gains have been absolutely epic. Over the past decade, has posted a mind-blowing 21,000% return. That's meme coin level shit, man. That's crazy. This is what altcoins are supposed to do, but don't. Altcoins. This tech company basically makes the GPUs the power of the AI industry. Another chip maker, AMD, has outperformed the wider market with an average annual return of over 48% over the past decade. That's crazy, turning a $1,000 investment into over $50,000. And the AI train ain't slowing down. AI is projected to contribute over $15 trillion to the world economy by 2030. And several tech stocks are uniquely positioned to take massive advantage of that shift. Plus, we're going to see lots of new tech stocks coming in all the time, whether it's Figure AI or Aptronic or Anthropic or any of this stuff. So fade this sector at your own risk. I'm not. I'm investing money in AI and robotics. Now, let's talk about our favorite Bitcoin, though. If we're talking pure returns, Bitcoin leaves every other asset in the dust. I know maybe your dog coin in the short term might put in bigger gains, but over the last 10 years, we're talking about serious assets here, guys. I know you think your dog with serious assets is not. Anyway, over the last 10 years, Bitcoin's up more than 45,000%. And if you zoom out since 2011, Bitcoin's delivered a jaw-dropping 20 million % return, but those days are gone. Okay, the days of 1000x gains are well behind us. That's the reality of diminishing returns as an asset matures, and it's definitely maturing now. BlackRock's selling ETFs to their customers, okay? But it's only part of the story because Bitcoin isn't just a financial asset. It's a network. It's a new tech as well, and it trades kind of like a tech stock, but with a higher beta, and networks grow differently. This is where Metcalfe's law starts coming to play. It's the same law that explained the rise of the internet in the 1990s and in the 2000s, and it says that the value of a network is proportional to the square of the number of users, which might sound a little bit confusing, but basically it just means that when a network doubles in size, its value doesn't just double, it quadruples. This is what made early internet adoption so powerful and so lucrative for early investors. As more users came online, the number of possible connections grew and the financial value of the network grew exponentially. That's why companies like Google, Meta, and Amazon didn't just grow, they exploded. Now apply that same principle to Bitcoin. Every new wallet, every new corporation, every new country legalizing Bitcoin or making a Bitcoin strategic reserve, every ETF buyer. It's not just adoption, it's compounding value. Bitcoin ETFs right now are literally buying billions of dollars every single week. Companies like MicroStrategy and MetaPlanet are stacking insane amounts of Bitcoin, and more companies are trying to catch up now. If you take just the ETFs and the corporations, they've bought well in excess of the amount of available Bitcoin that miners can produce during that same period of time. El Salvador is buying Bitcoin. Bhutan, the quiet overachiever, they're buying Bitcoin. They've been low-key mining a jaw-dropping 13,000 Bitcoin stash, now equivalent to 40% of their GDP. This isn't just momentum, it's full-on Bitcoin boom. Pakistan just legalized the Bitcoin reserve. The number and speed of adoption makes a very compelling case for Bitcoin. It's no wonder you have people like Cathie Wood eyeing a $700,000 to $1.5 million price tag for Bitcoin by 2030. Michael Saylor, unrelenting bull. His price estimates coming anywhere from $13 to $21 million within 2 decades. I can hold for 2 decades for $21 million, guys. I'm going to tell you that. Guess I'll be 60 then, but screw it. $21 million Bitcoin. Here we go. Now, our only problem might be making sure we live long enough to see it. Okay? Take care of your health. Don't screw around. You got to be around. All right? So should we sell everything and go all in on Bitcoin? Bitcoin purists would say yes. Bitcoin purists suggest yes. But there's no denying the comforting stability of gold. But gold's lost its shine for me, to be honest. And guys, look, technology is always going to shape the future. So stuff like NASDAQ, AI stocks, robotic stocks, big. I think having exposure is smart personally, and I'm doing that. Can't tell you what to do with your money, but that's what I'm doing with my money personally. I think diversification, of course, is very critical, but my portfolio will always lean heavily on Bitcoin. It's my number one asset holding across all assets. But who says I can't stack some nice tech stocks just in case, right? With more NASDAQ companies turning to Bitcoin treasuries, you might already be getting the best of both worlds anyway. In the end, it's not about choosing one asset over the others. It's about knowing what you're holding and why you're holding it, and why each one is in your portfolio and having a reason for that and a strategy around it. It's about covering your bases and making sure that you survive no matter what comes next in markets. So instead of just having a plan B, maybe it's time to have a plan C and a plan D too. Maybe getting some real estate or something like that too. But let me know down in the comments what you have in your portfolio. Are you all Bitcoin? Are you Bitcoin tech stocks? Whatever it is, I'm curious to hear it. Let me know down below in the comment section. Thanks for watching.